is happening, everybody? We are back with a unique, vibrant, valuable video. I go by your boy UV the Great, and I'm brought to you by the Unique Trading Group, where we discuss stocks and commentary. All right. First of all, I want to get started with a recap of last week and the past couple of days when I talked about the market conditions. And I want to start with just an introduction to who I am and how I got started. And as you can see here on my screen, we have the community engagement tab. And here is where unique traders like yourself, if you decide to join, or people who've already joined my Discord, we come here and we engage newbies, oldies. All right. So I just wanted to just read you this piece here. All right. Today was a very spicy day. The market moved pretty good and the market dropped pretty good as well. And there was a reason for that. But before we get started, let me let you know my journey in trading philosophy. So I wanted to take a moment to share a little bit about how I got started in trading and why I created this community. I began trading pre-COVID. It was driven by the curiosity, but held back the belief that the market was out of my league. Like many, I thought it was something only for professionals, but eventually I took that leap, got my feet wet, and yes, I lost money early on. However, I didn't let that stop me. I realized that losing was a part of learning. I read books, attended seminars, and kept pushing forward because I knew I was missing something. The desire to understand the markets became stronger, and I paid for my education to gain that edge. Over time, I discovered that there wasn't just one secret to trading. It was a collection of tools, strategies, and recognizing market returns. I started noticing patterns and discrepancies, moments in the market that seem invisible to others but kept repeating. I refined my strategy, paper trading to build confidence, and learned how to manage risk. I mastered the art of losing without fear, which allowed me to focus on what worked. Eventually, I couldn't keep this to myself. I wrote a book and I created this Discord to share my method and help others find their own unique path in trading, hence the Unique Trading Group. The market isn't random. It moves with symmetry, momentum shifts, and emotional swings. My trading approach is built on technical analysis, precision timing, and recognizing key inflection points that others often overlook. I named this group the Unique Trading Group because my style reflects a blend of pattern recognition, market structure, and adaptability. Over the years, I've developed the ability to find and exploit market discrepancies, and these moments when the market reveals inefficiencies that lead to high probability trades. And let me read that again. Over the years, I've developed the ability to find and exploit market discrepancies, those moments when the market reveals inefficiencies that lead to high probability trades. So if you've ever felt like the market is a matrix of numbers and emotions, you're not alone. This group is about uncovering those patterns, learning together, and mastering the small details that make a big difference. All right. Order execution, risk management, and capital preservation. All right. And so listen, I want to go over to the top tier section. Hope that made some sense to you guys. All right. And I really mean that, and I'm really passionate about that. And so it's really important to open up to you guys and be vulnerable and give a little backstory to who I am. Giving guidance, which is not financial advice, but only for educational purposes. But I think it's pretty valuable to give something and not be selfish to you guys that can help you on a day-to-day if you desire to trade. All right. So let's get straight into it. Now, I said I wanted to recap. Today was a great day, and so I posted a message in the Discord on 12/31. It's the 6th of January now, but I'm always posting. And if you check out my YouTube, and we'll look at some things later, you can see that I give out some pretty good guidance for the Discord group. All right, so the key levels, recapping. All right, on the 31st, I said that 580 was the monthly low. Right before we got a new year, the critical for defining risk. So 590 must reclaim and close above to shift bullish into the new year. All right, failure to reclaim equals continue range with downside risk. 586, 585 demand zone. This is the area that needs to hold or bulls lose momentum. And if it breaks, shorts likely target the bottom of the range. And this was the recap and the guidance that I gave on the 31st. Okay, and we're going to check the charts to see what actually played out. Here I'm just reading some things. The range breakdown. 0% mark, 580 monthly low. The 50% mark, 585, 586, which is key demand mid-range, and the 100% mark, which was 590, bullish breakout above this. Now we are currently sitting back at 595, although we did go to 599 today, actually. And there was some other guidance I gave out, but we'll get into that. But this was on the 31st, and so I wanted to recap so you guys can see how clean things played out. All right, so this is the auction theory in play. All right, a higher close into New Year catalyst could trigger self-fulfilling buying pressure. Above 590, buyers take control. Below 585 and 586, bears likely drive the price to retest 580. We didn't get that. All right, trading position. The entry, reclaim of 590 on a daily, quarterly close. The exit, break below 85 or 586 or fail to retest the 590. All right, with a tight stop. All right, so let's head over to the charts and let's see how things played out. Okay, now we are on a daily chart. Okay, and here is the 27th. All right, this is the 27th. Okay, now I'm gonna move this over some so you guys can see. All right, now if you're a beginner, just in case you guys are a beginner, all right, want to give some detailed information to start off with some market structure, like I always like to do, to be common, to be plain, to be relatable. All right, we have an uptrend and a downtrend. Very basic technicals on a chart, all right, when you first start trading. All right, here's your uptrend. All right, you have a pattern starting here, a buying point. We go up a little bit, we pull back. We go up a little bit, we pull back. We go up, right? This point here, right, that bottom of the V shape here, this pullback creates a higher low. This was the previous low, so this one is a higher low. Price pulled back from here, came there, created a higher low. That's a bullish trend of momentum for continuation. All right, pretty simple. All right, and then you have a downtrend. Okay, downside, pull back, downside, pull back. Okay, and we're gonna make this red just for going down purposes, for selling the market. Okay, now why is this a downtrend? Because you have a point here, this is a high, the market fell, it retraced it up a little bit, and it failed to go higher. So this point here is a lower high than this point here. Okay, so again, this is a uptrend because you have higher highs than previous, right? This is a high, higher than this previous high, and this is a low, and this low is higher than this previous low. Uptrend. Downtrend will be the opposite, when you would have highs that are not creating higher highs above, but rather low. And then we drop down, creating a lower low, because this price here is lower than this price right here. Okay, so you have what we call higher lows, higher highs, okay, higher highs and higher lows, and you also have lower highs and lower considered downtrends. Okay. And these are considered uptrends. Alright. Okay. I just wanted you guys to understand these basic movements before I go further. Alright, because going forth with clarity means that we can all have the puzzle pieces come together as we're moving through the video. Alright, so now that we know that, we're on a daily chart. Now remember, my levels were 585, 85, and 590 on that recap video. And so we want to establish on a daily chart, are we in an uptrend or a downtrend? Okay, so let's put a parallel channel up here and let's see, all right, what it clearly looks like. Let's start from this point here, bring it all the way up to catch this wick, and we're going to get the body of this channel up here, cover these highs and these wicks right here, catch these wicks right here. Okay, let's move it in a little bit so you guys can see more. Okay, we could have made that even more cleaner if we wanted to. Actually, now that I move the charts in a little bit, we can actually take this parallel channel, which is what this is, and we can adjust it to fit the price action itself. Okay, and there we have it. All right, now judging from this chart, I just want you guys to take a couple of seconds to notice, are we in an uptrend or downtrend? Just want to just ask that question. All right, take your time. All right, okay, cool. Whatever you decide, we'll find out in a second. Okay, so if you said that we were in an uptrend, you would be absolutely right, because we do have an established here. We have a higher low here, and we have higher highs consistently. Right now, we don't have a higher high, but we do have a higher low. So we are in a in between zone at a 50% mark, right by the 21 SMA, which is one of my call triggers and put triggers for high probability trades. When price is above this gray line, I tend to buy calls, and when it gets below it, I tend to look more bearish for puts. But right now, we don't have a higher high, but we have a higher low. So we're in indecision mode, and the market is taking a pause. Usually when this happens, we want to wait for a break. Okay, we want to wait for a break above here of this overhead resistance. Okay, and this line comes from this top of these wicks, capturing the wicks that you can see price will react from. All right, so as of right now, we have a little bit overhead resistance. All right, now getting back to those numbers. Now that was posted on the 31st. Okay, on the 31st, and of course I posted way back here. You know, like I said, check out the YouTube video right above that you see pop up, and then you'll be able to see these videos of me making my predictions. Okay, so let's jump back here to recap in real time. On the 27th, right here we opened up at 597.54 on the 27th of December. Okay, and we fell to a low of 590 and closed at 595. All right, and so you can see here 23rd, 24th, 26th, 31st. All right, and here we are with the 31st. Okay, now this is the day I made that post the night before, and I mentioned that we had to get above 590 in order to see us get to the upside. All right, now I'm going to squeeze these charts so you can see everything. All right, we are dealing with this candle here, and I'm circling. Okay, this candle here, and I'm circling. All right, now this candle right here needed to be breached above this level. All right, the high of this candle, if you put your cursor here, you can see the open, the close, the high, and the low. All right, right up here to the left, see my cursor? Right here to the left is where you can see the open, high, close, and the low of any candle on this daily chart. And remember, each candle represents a daily movement. Daily movement. All right, open, close, high, and low. It's a day's worth of price action. Anytime you see one of these candles on the daily chart, and that goes for any time frame. Whatever time frame you're on, Each candle represents that time of movement for price action. Okay. All right. So for that day, we closed at 586. All right. That was on the 31st. On the 2nd, the following week on a Monday, we opened up at 589. Now, the close of the 31st candle was 586. The opening price on the 2nd of January was 589. Now, I mentioned in the Discord again that we could see bullish momentum if we stayed above previous closes. All right, and that's exactly what we did, as you can see here on the chart. The next day, we opened up higher, but we closed above, and we ended up gapping up on the 3rd. All right, now we are on the 6th. Now, if you pay attention, if you wanted to get into calls and you were unsure, if you just take a close look at a simple horizontal line. Now, I'm putting these lines above the previous highs. The high of this candle, the high of this one, and breaching a little bit of this one. But it's also right here, the bottom of this candle, the low of that was 590.76. This is where I got my target for calls from, because I knew that if price breached, buyers and sellers would have had to react to this previous range here. So I would wait for a break above the candle on January 2nd, this candle here. Once we get a break above, creating a higher open than the previous close, which is on the 2nd, this candle on the 3rd opened higher than the previous close. Let's recap the close of this one. The close is 584.64 for the 2nd of January, 584.64, and then on the 3rd we opened up at 587. That's a $3-4 gap. Anytime you see a higher open than the previous range, it's bullish momentum, and when you see it open below, it's bearish momentum. And for this case, we got a little bit of movement to the upside. We opened at 587 and we reached a high of 592. All right. Now, 592 at this point was way past my targets, but I made a recap video for that. And we've been shooting up ever since. We broke this high, 592. We gapped up today. All right. We opened up at 596 and rallied all the way up to 599. And so now 599 is the new place of resistance. Okay, and that's what we have right now. And so now I'm looking for a break above 595, because we retraced back from 599 to 595, and we are sitting right at the cusp of the 21 simple moving average on the daily chart. And so tomorrow we have data, and we have a short week because Thursday the market is closed. And so this is what we're dealing with. A break of 594.72 would push us right back down to these previous price ranges that we just talked about. 594 is actually a call trigger that I gave a couple weeks ago. And so the same numbers always tend to apply. This is that candle right here. Okay. And it closed at 594. All right. And so that's my recap on SPY and entry day right now. Let's go down to the 5-minute on SPY, so we can recap today's trading day. Today was a very interesting trading day, if I say so myself. Very, very nice movement. How we opened up. Very, very beautiful. Very, very beautiful. Okay. This is the 5-minute time frame. Okay. Now, this was a swing trade. Me and a couple people from the Discord, we got into calls. They took some of my guidance. Some of the people even reached out to me personally to ask me to recap one-on-one with them. And so that's what I did. And so remember that I said 590 was a demand level for buyers to step in and take over. Well, here you have a 590 consolidation here. This is on the 3rd of January. Today's Monday, right? And what do we have here? Break above. We broke above. Price stayed above. We retested the area right here. We consolidated above the 21. This is pre-market. We closed. We opened higher. We gapped up. And we continue to go higher. Continue to go higher all the way to 599. Parabolic move, waiting for breaks of previous highs, creating all-time highs. And that's what we got today. I scalped this. I kept myself in profit, trailed my stop, right? And I got out around here because I seen that 599 was a psychological level for buyers to take their profits and for sellers to take over, to ride it back down with options, buying puts, all the way back to where we started from again at 594, 595. And that's what we have here now. And now this is the range that we play with to see whether or not we want to buy calls. So I'll leave you with this. 595 must hold as demand in order to buy calls. Okay? 595 must hold as demand for us to buy calls to reclaim 600. All right? There you go. Okay? Now, if we don't, we're going to retrace back to 593 and of course 591, 590 where we started again. It always resets itself. Now let's quickly check why this 599 hit and fell. Is it ironic or is it just market behavior? Well, the last time we got to these levels, 601, 599, we fell hard all the way back to 591. So this has already happened before in time. Doesn't mean that it has to happen now, but I do see a lower high here. Remember we talked about that? See how I said things correlate as we talk? There's a higher high here, there's rejection, and we have momentum to the downside. Doesn't mean it have to, but right now that's what price is showing. Okay, so that's what I'm looking for with the data tomorrow. If we stay above 595, we're bullish. If we stay below it, we will continue to go to the downside, and that's just how it works. All right, so enough of these charts. I want to quickly go over to something in my book. This is chapter 15 from my book, and I just wanted to talk about a couple of things. And actually, there was a section up a little further that I wanted to start with, which was the power of location and trading. All right. Now I won't keep you long, but this is for educational purposes. And so I wanted to give you guys some meat, something solid to run with. All right. So just a brief moment in time. Location is everything when you're trading stocks. Just as real estate, trading involves buying low and selling high. And when it comes to finding the right price to buy, location can make all the difference. It's important to analyze previous price fluctuations by studying patterns and identifying undervalued areas. And as a result, you can make informed decisions about where and when to buy. One powerful tool for traders is to use the wicks on a chart. Wicks are technical analysis tools that help identify market trends and potential price reversals. By using wicks, traders can pinpoint undervalued areas and make decisions based on where you want to buy and sell. Okay? Now, by analyzing previous price fluctuations and market trends, investors can identify these undervalued areas and make smart investment decisions. By studying previous price fluctuations and identifying undervalued areas, you can make informed decisions that lead to success. Now, here on my book, I have a intraday checklist, how you are supposed to check the economic calendar, because data affects market, SPY and the NASDAQ especially. You have volatility that happens, and if you're not informed about these things, you're going to lose if you're not taking profit or you have an advanced order. All right, so you got to review the daily open, locate and mark the daily opening price on your chart with horizontal lines. This serves as the crucial reference point. Calculate the ATR. Leverage the daily open candlestick to calculate the average true range, providing you with insights into price volatility. All right. You are to check the market sentiment. Gauge the overall market sentiment by referencing the CMB sectors or other trusted sources. Pay attention to sectors displaying notable positive or negative percentage changes, and consider trading stocks within sectors demonstrating strength. Now here's the key point, and I'll get off of this. To to focus on stocks with volume. Prioritize stocks with robust trading volume to ensure liquidity and avoid those with low or erratic price patterns. Now, this is very, very important because some people don't really understand the fact that you can be inside of a trade and it looks good, but at the end of the day, it's not moving anywhere. There's no momentum. All right. So it don't really matter what you emotionally think. What you're supposed to do is just focus on volume and wait for your setup and let the market come to you. Okay. Now over here, I have a diagram to further illustrate my point about volume and order flow. Now on a chart, this area here, right? This is a car, right? Forgive the drawing. I'm not the best of drawer, but I do know trading. So bear with me. These two cars here, an example of a price movement, right? And we need momentum. The car is trying to get over the hill, right? The car is trying to get over the hill. Now, this is order flow and volume, okay? So the order comes in. Of course, the numbers represent the orders. You see the order is the number. This could be that 590 area that we talked about on the chart, right? And so this is the order. But where's the flow, right? Well, if price is moving up, you know where the flow is. You got to find a momentum, right? But there's a secret thing that people miss. They look at charts and indicators, but they forget about order flow and volume. The volume is most important, all right? Where's price action telling you? Well, you have 3 people representing this car, and you have 30 people pushing this car. Ask yourself a question. Out of these two, which group of people you think are going to push price over? 30 people? 3 people, all right? And this right here is what I call auction theory, okay? And I'm going to end this video shortly, so I appreciate you guys staying with me as I talk with you. But this is called auction theory, and I'm going to be talking more about this on future videos. Briefly, not too much detail, because I have a course that I'm working on for you guys, and I'm sure it's going to be greatly appreciated. I want to actually go to the Discord and go back to the top tier Outlook. All right. Now today, I posted this in the chat. Now this is from 12 hours ago, right? Not today, but this was yesterday, before today. And I said that I smelt a rally coming on. Okay. You can read it here. Tomorrow we rally. Congratulations, bull. Enough buys to push the market. Maybe even a 2-day rally. All right. I pushed my luck with that one there, right? But we got that today. That is exactly what we got, guys. We got a push to the upside, and it was lovely. And actually, here's the proof. A little bit of what I've said before. There, we could talk about it. As of right now, we are up under the 21, which is bearish. Right now, we are not showing momentum, which is bearish. And we are showing a whole lot of pressure to the downside. And so 590 could act as a resistance. If we cannot get past 590, it'll only be inside of a range from 585 to 590. Now, let's go down to the 4 hour. All right. Now, this is the 4 hour. Okay. Now, that was the opening and close dynamics. Okay. And just to mention, the weekly close and the monthly close settle price to low. All right, the low of the monthly, more specifically on SPY, was 580, and we closed above 580. Bingo, we closed above 580. Folks, trading does not have to be that hard. Okay, it does not have to be that hard. I encourage you to check out my YouTube, to join the Discord. I appreciate you guys watching. You should really check out my other videos where I update SPY. And look forward for the other ones that are coming soon, because you guys requested it and you guys demanded it. And so make sure you like and subscribe if you found this video valuable, and share with some of your friends and family. Until the next time, peace.